Welcome back to the channel, where we break down everything you need to know about the stock market, investing, and personal finance. If you're new here, don't forget to like, subscribe, and hit the notification bell so you don't miss any of our latest content. In today's video, we're diving into a fascinating topic: who are the big players in the stock market? If you've been following the stock market, you've probably heard of terms like institutional investors, hedge funds, and market makers. But what do these terms actually mean? And who are the real powerhouses behind the scenes? Understanding the big players in the stock market is crucial because they have a significant impact on the market's direction. They move vast sums of money and influence stock prices, creating trends and shifts that can affect everyone from small retail investors to multinational corporations. So, whether you're a beginner just getting started with investing, or you're looking to deepen your understanding of how the stock market operates, stick around because we'll break it all down. 1. Institutional investors. When we talk about the big players in the stock market, institutional investors are always at the top of the list. But who are they? Institutional investors are organizations that pool large amounts of capital to invest in securities, such as stocks, bonds, and other financial instruments. These include mutual funds. These are companies that manage money on behalf of individual investors. They gather funds from a wide range of investors and use that money to buy a diversified portfolio of stocks, bonds, or other assets. Some of the biggest names in mutual funds are Vanguard, BlackRock, and Fidelity. Pension funds. These funds invest the retirement savings of workers and are some of the largest institutional investors. Examples include CalPERS, California Public Employees Retirement System, and the Government Pension Investment Fund GPIF of Japan. Endowments and foundations. University endowments and charitable foundations also manage massive pools of capital, which they invest to generate returns that help fund their activities. Harvard University's endowment is one of the largest examples globally. Insurance companies. Insurance firms invest the premiums they collect from policyholders in a wide array of assets, including stocks and bonds. Companies like Prudential and MetLife are notable examples. Why are institutional investors so powerful? Institutional investors control a massive portion of the stock market's total value. In the U.S. stock market alone, institutional investors account for around 70% of trading volume. Their size and influence allow them to shape trends in the market, such as pushing stock prices higher or creating waves of selling. Their ability to engage in large-scale trading, buy or sell in bulk, and engage in sophisticated strategies also gives them a tremendous advantage over individual retail investors. 2. Hedge funds. When it comes to the most influential and often controversial players in the stock market, hedge funds take center stage. What is a hedge fund? Hedge funds are private investment funds that use a variety of strategies to generate high returns for their investors. Unlike mutual funds, hedge funds are less regulated and often employ aggressive tactics like short selling, leveraging, and derivative trading. Some of the world's largest hedge funds include Bridgewater Associates. Founded by Ray Dalio, Bridgewater is one of the largest hedge funds in the world, managing over $150 billion in assets. Dalio's investment philosophy has shaped much of how modern hedge funds approach the markets. Renaissance Technologies. Known for its highly quantitative and algorithm-driven approach to investing, Renaissance Technologies is considered one of the most successful hedge funds. Its Medallion Fund has generated returns that are among the best in the industry. Citadel, another major player in the hedge fund industry. Citadel, founded by Ken Griffin, has its hands in everything from equities to commodities to options trading. Citadel is also one of the largest market makers in the world. Why are hedge funds so influential? Hedge funds have become incredibly powerful due to their ability to make large, quick bets on market movements. Their use of leverage allows them to amplify their gains or losses, making them a formidable force in the stock market. Moreover, Their strategies can create ripple effects across sectors, industries, or even entire economies. Hedge funds are often seen as high-risk, high-reward players in the stock market, but they can move markets in ways that retail investors can only dream of. 3. Market makers and brokerage firms. Next, let's look at market makers and brokerage firms, key facilitators of trading activity. Market makers are firms or individuals that stand ready to buy and sell securities at quoted prices, ensuring that there is enough liquidity in the market. Without them, it would be much harder for buyers and sellers to transact at fair prices. Some of the largest market makers and brokerage firms include Citadel Securities. Yes, Citadel had the big player in both hedge funds and market making. It is one of the largest market makers in U.S. equities, handling a significant portion of daily stock transactions. Virtu Financial. Virtu is another major player in the market-making space. The company uses advanced algorithms and technology to buy and sell assets quickly, providing liquidity and making it easier for investors to execute trades. Charles Schwab and E** Trade. These online brokerage firms are also among the big players in the retail investing space. They facilitate trades for millions of retail investors, and their platforms help shape the way individual investors interact with the stock market. 4. Central banks. You might not expect central banks to be involved directly in the stock market, but their policies and actions can have a huge influence on the market. Federal Reserve US. European Central Bank ECB. Bank of Japan BOJ. Central banks set monetary policy, control interest rates, and influence the money supply, all of which can affect the stock market's performance. For example, when central banks lower interest rates, it makes borrowing cheaper, which can boost stock prices as companies can easily fund expansion. Additionally, central banks sometimes engage in quantitative easing, a process where they purchase government bonds or other assets to inject liquidity into the financial system, which can also influence stock market movements. 5. Influential investors and figures. No conversation about the big players in the stock market is complete without mentioning individual investors and financial icons. Some legendary investors have amassed wealth and influence through decades of strategic investing. Warren Buffett, known as the Oracle of Omaha. Buffett is one of the most successful investors in history. Through his company, Berkshire Hathaway, he has made billions of dollars in investments across a range of industries, from insurance to technology. Elon Musk. As the CEO of Tesla and SpaceX, Musk is not just a corporate leader, but also a market influencer. His tweets and public statements can cause wild swings in stock prices, especially in the tech and electric vehicle sectors. Carl Icahn. A well-known activist investor, Icahn has made a name for himself by taking large stakes in companies and pushing for changes in their management or strategy to unlock shareholder value. 6. Retail investors and the rise of social media. While the big institutional players often dominate the headlines, retail investors are playing an increasingly important role, especially in the age of social media. Platforms like Reddit's Wall Street Baits, Twitter, and Discord groups have allowed retail investors to organize and influence stock prices in ways never seen before. Examples like the GameStop short squeeze in 2021 show the power of collective action among retail investors. When ordinary investors band together, they can challenge institutional players and shake up the market. So, there you have it, the key players in the stock market. From institutional investors like mutual funds and pension funds or the powerful hedge funds, market makers, and even individual investors who shape market trends. Understanding these players is crucial for anyone looking to get a deeper grasp on how the stock market works. Remember, the stock market is a dynamic ecosystem, and while large players may hold significant sway, individual investors, especially when informed and organized, can have a powerful impact too. By keeping an eye on these key players and their moves, you can position yourself to make smarter investment decisions. Thanks for watching, and if you found this video helpful, Don't forget to give it a thumbs up and subscribe for more in-depth market analysis. If you have any questions or want to dive deeper into a specific player or topic, drop a comment below.